Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Friday, December 23rd, 2022. Actually, before I jump into the charts like this one and talk about it, I'd like to encourage you to please click like each and every time you watch the daily Apple report. That includes the daily Tesla report. And also subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. And if you would, please share the content with friends and colleagues and get the word out. We appreciate it. So I've got 134.37 shown here. It's really not even a precise point. There are other levels, upside Fibonacci's over the last couple of days that I'm leaning on more heavily. And in fact, it's 133.56, I think, that is our upward pivot point into the day, into later day. If we happen to push or open above 133.56, the 136.91 level isn't reached. This is the former 2 to 3 week channel bottom. We settled below about a week ago, then setting off a 2 to 3 week sell signal into the targeted still lower 120s. I'll get to that in a moment. 136.91 is also backed up by 137.22 today. So not unless we close above 137.22 do I anticipate recovery into later next week. Until then, this is a zone that can contain buying into later next week, and we can fall off again from there, as we did on Thursday. And so we remain heavy below 136.91. I'll show a better representation of it right here. Having closed above it a week ago, this 123.26 formation becomes a 2 to 3 week objective. It remains a 2 to 3 week objective. It's a 1 to 2 month objective anyway, below 144.23, this long-term speed line that we tested quite a bit in October and November and December. And below which, as I've been saying, 123.26 remains a 1 to 2 month target. So we are on our way to reaching 123.26. So holding below 136.91 maintains a heavy dynamic into next week. And downside today, holding below 133.56, 129.04 is in reach. And yes, that is nothing more than the June low. It can contain session weakness. We could double bottom here for a day, maybe into later next week. But given the heavy state of affairs below both 136.91 and the more meaningful 144.23, and the fact that we're expecting 123.26 over a couple of different time horizons, closing below 129.04 is considered an eventuality, and it may happen today. And if it does, then 126.11 is likely on Monday. 126.11 is a 2 month channel bottom that over the next couple of weeks converges entirely with this longer term 1 year channel bottom at 123.26. So, 126.11, you can kind of take your pick once you get into the mid 120s or lower. 123.26. And on the weekly chart, as I've been saying, we've got 119.81 to 123.31. This is a zone of support that can absorb selling not only through Q1, but into later 23. And yes, it's expected over the next 2 to 3 weeks below 136.91. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, upside today, if we happen to close above 137.22, and by the way, I forget to suggest these. It is, I don't paint a full picture because everybody trades different. I know I'm speaking to day traders. I'm speaking to swing traders who are trading the 3 to 5 day to 1 to 2 week swing trade. I'm talking to position traders who are holding Apple for weeks on end. And so I hate to say, here's what you should do. This is where you should buy it. This is where you should sell. This is where you should place your stop. I basically paint the picture that holding below 136.91 to 137.22, this is a good area to short sell into next week. And once we get up into this zone, you could scout 125 out of the money puts because they'll be a little cheaper than they were in the opening on the opening bell. You follow me? So if we happen to rally, 5 points, let's say, today up to 137.22, that would be the zone where you could pull a trigger on buying a 125 or a 123 out of the money put that doesn't expire for at least a couple of months. And if we close above 137.22, you want to cover that position and go long. You could then buy Apple for the next 3 to 5 days up to 144.23. And 144.23 is the long-term speed line. If we get back up here again, as I was saying a couple of months ago and over the last month, every time we tested this, or just about, I was reminding you, you may scout out low 120 out of the money puts, 123, 124 out of the money puts that don't expire for at least several months. And I'm hoping that some of you have done that you still hold that 122, 123, 124 out of the money put. Because it's probably appreciated nicely depending on which one you bought, of course. So, I don't see a good reason to be bullish Apple until either A, we drop into this 123 handle support, and then it's bottom picking time as we move into later Q1, or until we close above 144.23. But even that, and this is the last thing I'll say, even if we close above 144.23, I think you can scale into a long position, but just know that you'll get a 1 to 2 week pop up to 153.78. And you may actually unload at that point in time and then climb back in, so to speak, if we close above 153.78. I would stair step it in terms of the buy. Now, closing above 153.78, you really have sort of a don't look back buy signal that should play out into later Q1, and then I would expect a low 180s again within several months. I'll also say this is the very last thing I will say, and I'm just going to eyeball this, that if we test this 123.26 formation over the next a few days, next couple of weeks, then it is this channel top here that is the more significant of everything above the market. And so if we test 123, you could consider buying, 168, 170, I don't have the exact number here, out of the money calls that don't expire for at least, I would go a year out. Because if you only go 6 to 8 months out, and it probably would take 6 to 8 months to rally all the way back here, you're going to see, there's nothing more frustrating than buying an out-of-the-money call that as you're approaching it is also nearing its expiration. And so you really don't get the bang for your buck. So I would go 1 year out, for instance, on an out-of-the-money 165 or 170 call as we ease into the 120s over the next few weeks. That is really all I have for Friday's Daily Apple Report. I wish you a happy holiday with friends and family over the weekend. I'll be back Monday afternoon with Tuesday's Daily Apple Report. You have a great weekend.